In the year 2022, we've seen interest rates go up more so than any time in 40 years. That can mean tougher mortgage interest rates when it comes to buying new homes, financing cars, and other items. It could also mean a great opportunity for more conservative and retirement investors out there. Today, I'm going to show you what's going on in this interest rate environment to ensure that you're taking advantage of a great opportunity that we haven't seen in decades. Keep it right here. Good day, everybody. Chris Heerlein here, partner at REAP Financial, host of Wealth Radio on News Radio KLBJ, as well as Retire Ready TV on KXAN. That's News Channel 36 here in Austin. Thanks for tuning into our video today. If you like what you're seeing, be sure to hit the subscribe button, give us a thumbs up down below. Well, in the year 2022, we've seen interest rates go up exponentially, higher than any time in 40 years as the government is trying to get inflation under control. So for those of you that have been in the housing market this year or into next year, or even financing a big ticket item, things have gotten a lot more expensive very, very quickly. But for pre and post retirees, for more conservative investors out there, we've been waiting a long time for interest rates to go up. If you think back, 2008, most people, if you were in the stock market, you remember what was going on there. Significant decline. But back in 2008, you could get a 6% bank CD. It's been a long time since 2008. And there's been a lot of years that have passed where you may be getting a 2% bank CD, even at best. But under today's interest rate environment, an inflationary environment, there's some tremendous opportunities to get more yield in your portfolio with less risk than ever. What's interesting about the equity environment and the bond environment in 2022 is generally when equities have gone down in the past couple decades, bonds have been the safe haven. But most bonds have been down 5, 7, 10, maybe 15%, depending on the type of bond you've owned. Now, equities have been down in 2022. We've seen 20, 30, 40%, depending on where you're invested. But bonds have not been the safe haven that they once were. And as we've seen interest rates go up, now you're seeing 3% plus money market rates. You're seeing bank CDs, 1, 2, 3 year bank CDs above 3%. You're seeing I-bond rates at over 9%. Now, the deal with I-bonds, if you could get 9% plus guaranteed, I think a lot of our clients may have a good portion of their retirement dollars in those. The problem with the general I-bonds I'm talking about at these high rates currently is you can only put up to $10,000 per person into these things. That's generally going to be the maximum. There's a few exceptions, but the exceptions are small. Only allows you to do a little bit more. So it's only a small piece of the portfolio. But there's also another strategy out there called a multi-year guarantee annuity, MYGA. We call it a MYGA, MYGA. It's easy, something you can Google very simply, and an account that a lot of families have never utilized. And one of the main reasons for that is interest rates have been so low. But MYGAs come in 1 and 3 and 4 and 5 year durations. That's typically the realm we want to see a family stay within. And on a 3-year MYGA today, you can get over 4% guaranteed. On a 5-year, you can get over 5% guaranteed. And these guarantees are backed by claims paying ability of the insurance company, the issuer. But these accounts are generally going to be one-way contracts to a saver. If interest rates go back down, these rates are locked in, very similar to a CD. You generally aren't going to pay any fee on a MYGA, just like a CD. The issuer is working with your money. There's tax deferral with MYGAs. A CD, I like the higher rates we're getting today, but on your banks and saving, you're having to pay tax on money you're not even using. You get a 1099 on those accounts every year. On a MYGA, the money grows tax deferred. In fact, when the maturity's over, in many cases, you can move it to a new MYGA, tax-free, and defer the taxes. Heck, we have clients that potentially may defer the taxes till they're dead. Let their kids worry about it. Money in MYGAs is off the books in the event of litigation. It's lawsuit proof. So there's some great benefits. But when we think about inflation today, and what we believe inflation may be in the 4 to 6% range over the next 3 to 5 years, you need to ask yourself, how is your safe money, your more conservative investments, going to keep up with a 4 to 6% inflationary rate. These MYGAs, higher rate CDs, may potentially be the new bond proxy in retirement portfolios. But you need to be aware of newer options out there or newer opportunities that are really coming to light because of this interest rate environment. If you want more information on how MYGAs, high interest rate CDs, and money markets could work in your portfolio, email me for my report right here. Send me an email, retire@reapfinancial.com. That's retire@reapfinancial.com, and my team will have it on its way to your inbox.